Should you buy gold? Should you buy a lot of gold? Should you buy gold coins? Should you buy numismatic coins? Should you buy silver and gold or platinum or palladium? Gold is in the news lately, and so the question is, what should you do about gold? How should you position? Should you position yourself at all? And what I want to do is I want to go through a exercise that I think you'll find helpful in pointing out to you how you can have two people or two groups of people be looking at the same asset and both even claiming they're both looking at and using price charts, and they're both technical analysts, and they're using technical information, and yet they can be on polar opposites of what they are wanting to do and suggest with gold. And so gold's a good example because it's so polarizing. And so I want to do that with you and show you how one can be, quote unquote, using the exact same tools, looking at the same asset class, and get a very, very different point of view. Hey everybody, this is RC Peck, and no talking head today. I am behind my computer. I'll be back in front of the computer or in front of the camera next week. So it is so good to have you here. And kind of the container of looking at gold price charts or looking at gold is looking at it through the lens of stories. The world is not made of atoms. The world is made of stories. And there are a handful, let's call it two really good storytellers out there. The Big Box Advisor, their basic story is very complicated, very complex, very dangerous world out there. Don't try to figure it out. We've figured it out through a very complex system. Just hand us your money. We're going to go long only, but that's because it's super dangerous to do anything else, right? That's their story. And then almost as powerful as the Big Box Advisors, if not more powerful, are the Pick of the Month newsletter industry. And they rail against the Big Box Advisors and they say, hey, the story is, it's the ticker symbol. You just have to have the right ticker symbols. And you need probably 20, 30, or 40 ticker symbols. And you always need to be refreshing one of them every month. But don't worry, we'll show you exactly what to do. That's their story. My story is a little different. My story is be powerfully simple and simply powerful. You only need to know two questions. Should you be in or out? And if in, where? And if out, where? I'm truncating that because I want to get to the topic. So stories carry a lot of weight. In fact, they carry the most weight out of anything, and not just looking at investing, but at all areas of our lives, our health, our wealth, and our relationships. And price direction, though I find price direction incredibly powerful and freeing, you can still have stories that have someone do the wrong thing at the wrong time, even if they're looking at price direction. And I want to point out to you how that's done. So I have 6 price charts that I want to share with you. They're all current. They're all of gold. This first price chart is a 10-day price chart. So you're looking at 10 days of information. Now, each little squiggly is a minute. So you can't tell each squiggle, but basically this is, if you look at the frequency, it's a 1-minute frequency. So that black line is going to move up or down every minute during the trading day. But if we look at the entire range, we're looking at 11 days. And if I look at this price chart, this is a price chart of gold. It's GLD. To me, this looks very bearish. Looks like, oh, stay out of gold. It looks very clear to me that it's going down. But it's only 11 days, and you're looking at every minute piece of noise that hits the gold market. If we step back and if we look at 3 months of data, the length of this price chart goes back 3 months. Now every little squiggle is 10 minutes. So we've taken every we've taken 10 1-block minutes. I have to think about this out loud, how to say this. We'll say, okay, let's filter out everything that happens in that 10 minutes and just give me the high, the low, the open, the close. And in this case, we're just looking at the close. So it's giving us less information. We're filtering out the noise. But now we're looking at 3 months of data. Now when I look at this, I see, oh, this is bullish. We are going higher. Gold is going higher, and it's in a correction. And, it looks like it's going to break out of that correction. Same asset. We're looking at 90 days worth of information. It tells a different story. And then this third chart, now we're looking at 3.5 years. Now in this case, we're not looking at every 10-minute squiggle. Now we're looking at every hour. So we just want to know what gold closed at for that hour. Now this price chart goes back 3.5 years. So we've filtered out the noise, and now we've zoomed out to 3.5 years. Now when I look at this, I see a different story. I see a story of bottoming. I see a story of finding its bottom, getting up, it being gold, getting up on its legs, and it's, standing up and finding that foundation. And that's what I'm starting to see here. Now, I have to say, one of the reasons I believe what I just told you is for the next price chart, because this price chart tells me yet an even different story. And I don't know about you, but to me, the story starts getting clearer and clearer, right? So now each little squiggle is one day, not 1 minute, not every 10 minutes, not 1 hour, but we're looking at the closing price of the day for gold. And instead of looking at an 11-day price chart or a 3-month price chart or a 3.5-year price chart, we're looking at 7 years of data. And this becomes even clearer that, gold does look like it's bottoming, and it may have even bottomed. And zooming out to that 7-year length of time and looking at the close of the day, not the close of the hour, the close of the 10-minute block, or even the close of the minute, but saying, okay, if we take a giant step back, what does the story start to reveal to us? And then here's chart number 5 of gold. Again, all these charts, all 6 charts were taken and captured in the exact same hour this week. Now we look at this price chart. This is 14 years of gold. Looking at 14 years of data, and each dot on that black line is where gold closed for the week. So we've filtered out the daily noise, the hourly noise, the 10-minute block noise, and the minutely noise. Make up a word there. And to me, the story becomes cleaner and clear that, okay, here we have an asset, was going up according to this price chart from 2005, stopped going up in hindsight in 2011, but went sideways through 2012, and then went through a correction. And it looks like and appears like that correction, it's coming to an end. It's coming out of the bottoming process. Now we won't know that until gold officially breaks above kind of this range that it's been getting stopped at. The range where it has historically been stopped is somewhere between 1375 and 1425. And then we have this final chart here, right? So this price chart's 37 years of gold. And we look at the closing price of the month, right? So we're looking at 1980 until this week. And here we see, again, a much clearer, maybe even a different story, because we have more background on this story. Gold was a place to avoid between 1980 and 2000. And then things changed. And then depending on where you started the bull run, either in 99 or 2001 or somewhere in between, from that 2000 to that 2011, 2012, gold was in a solid uptrend. And now it is going through a correction, which a correction happens with most things when they are moving higher. It doesn't matter whether it's technology, biotech, emerging markets, or precious metals. And so now when you look at this, to me, this is even a clearer picture that gold is in the process of bottoming. Now, this isn't necessarily has gold bottomed or has it not bottomed. What I want you to take away most is how those who tell the story control society. Now, that quote is from Plato, and I'm not sure if the actual quote is those who tell stories rule society or those who tell stories control society. It's pretty much the same thing. But you think about whose story you fall under, whether it's my story, which is investing is simple if you let it be, or the big box advisor, which their story is investing is very complicated and dangerous. Only do the long only because you can never know what's going to go on, so never get out of the market. Or the pick of the month newsletter, very complicated, but the answer is in 30 to 40 ticker symbols that get renewed, or one gets renewed every month. Right? They're all stories. So what's the takeaway? And I want to be really clear, right? Time frames matter. If you're looking at a 1-minute price chart that goes back 11 days, you're going to get a very different story that comes out of that. If you look at a monthly price chart that goes back 37 years, you're going to get a much different story out of that. So from the price charts come a story. And I want you to think of it that way, not you go in with a story and you find the price chart that fits your story, but get the price chart first, look at it at different time frames, because time frames matter, right? You want to take that step back. You want to look at multiple time frames. Now, I don't look at 1 minute and 10 minute and 1 hour and 1 day and 1 week and 1 month necessarily, but those 6 different time frames all told slightly different stories. Stories matter. What I want you to do is I don't want you to buy the story necessarily. What I want you to do is see, does the price charts, right? Prices never get relisted or restated. Like it's the price, it's the price, it's the price. Earnings get restated. GDP numbers get restated. Price never gets restated. So start with the price charts and take a step back so you have a big picture of what's going on. And that will help you get the clarity so you can start following your own story, or you can start following the story of Powerfully Simple and Simply Powerful. Thanks so much, guys, for being in my world. This is just another step in helping you protect your portfolio and your future. Hey, guys, you belong here if you want investment stability, but you don't want the hype, or you're tired of the hype and the BS, guys. Let us help you become the smartest investor in the room. So really you can stop drowning in the drama and the distractions and get the principles for free. You guys are great. I appreciate you being my world. Upgrade your investment peer group. That's the number one thing that will affect your entire financial and emotional and spiritual life. And please go ahead and like, share, and forward this because it makes a difference. You guys take care.